Hi traders, welcome to the Markets in 3 with me, John. Today we're going to be talking you through the 3 most important things for your trading day. First of all, we're going to be talking about the chart check. We're going to be going over a seasonal pattern that has a 95% success rate in the markets. The second thing we're going to be talking about is the big story. We're going to be talking about, is dollar yen actually a tradable asset right now? And then the third thing is the skill of the day, and we're going to go over how important it is for your trading to basically explaining you what an FX intervention is. So let's get into it. I lost my train of thought there, but let's get into it. So Markets in 3, we're kicking it off with the chart check. We're kicking it off with this seasonal pattern here. So I'm using the Markets Made Clear seasonal software, and we're going to be looking at this pattern in particular. So when we take a look at seasonal patterns, we like to look at potentially what we call optimal patterns. And an optimal pattern is essentially the current price action following the sort of a seasonal pattern that has occurred in the past. So what we're looking at here is throughout the history of this information here, documented by Markets Made Clear all years, we can see that usually at the end of June heading into July, the S&P 500 can go on a decent run. Now, what's most interesting about this is that we have a 76% correlation with this particular trading pattern and current price. So what that just tells me is that the current trading year so far in 2026 is showing a very, very similar pattern that we have had over all the years. Okay, and if we go take a look at what that means in terms of how many years it goes back to 1951. So since 1951, this pattern has occurred, and throughout those years, we are seeing a 76% correlation. Now, if I click onto this little blue button here, you'll see that we have a strong seasonal pattern. It says 77% here at the moment. But if we convert that into something else, it will give us a different reading. But over this many years, we have a 58 success rate, okay, which is incredible to say itself. So let's dive into what we could expect for the S&P 500 then. If I just actually take off all years and we just put in 20 years, hit this number in here, you can see that it increases to 95%. So let's take a look at that pattern in a little bit more detail. So over the past 20 years, we've had 19 victories, only 1 losing year. And that losing year was in 2008. So pretty significant, the fact that we've had 20 years of this pattern occurring and the only losing year was in 2008. And that's for pretty obvious reasons in terms of the situation that was going on with the financial crash of 2008. Now, over an annualized return, 49%. Performance, we have a max profit of 7.2%. So that just means that kind of one of the best performing years, we had 7.2%. The average gain is 3.1%. So that's pretty decent. And if we go take a look at the S&P 500 right now, we can see that price has been fairly bearish and we're now starting to break out. If we look at the daily chart here, we are situated in and around that 7,350 area right now. Market is finding support all the way through this little area here. We have that 50 daily moving average here acting as support too. So for me, I'm looking for buys. I'm looking for longs on the S&P 500 right now, but I need to see some conditions coming into this. Okay, and what I mean by that is whenever I look at a potential pattern in the market, I follow a 3-step process. It's why, conditions, and strategy. The first one is the why. So we've narrowed that down to the fact that over a 20-year period, we have a 95% success rate with this seasonal pattern here. Usually we see the S&P 500 rally from the end of June, start of July, all the way through to the mid-end of July. So if we want to be really specific about that, the pattern window really is between the 30th of June, which is today, to the 20th of July. So I want to be trying to look for conditions where that formulates, right? And you can see that we are finding support down here at this 7,350 handle. So I want to be looking for potential long opportunities on here. Now I need the conditions to match up with that. And what I mean by that is I'm a trend-based swing trader. So I need to see sort of lower time frames and higher time frames in those particular conditions. Now the daily chart is definitely in an upward trend. We've come into this level of support. Now I need the 4 hour to do the same. Once the 4 hour does the same, I'm going to go down and try and get an entry around the 1 hour chart, maybe even a 30-minute chart. So what I can see right now is the market is making lower lows and lower highs, but most recently we've started to break into new highs. So this is kind of like the formula of a potential break in that structure, right? We're starting to see those highs getting cleared. So what I need to see really now is for price to start pulling back a little bit, okay? And then again, narrowing it down into my lower time frames, such as the hourly chart, look for that break in trend again. Once I get that, there's an opportunity for me to buy. Now, the average gain for the S&P 500 was around about that sort of 3.1%. So if we take a look at where price action is sort of today, and we look at where 3.1% could potentially land us, we could see 3.1% all the way up around about that sort of 7684 sort of level, right? So anywhere around that's kind of 7680 level. Okay. Now, if I just go back up to a daily chart, that means that prices will be making new all-time highs. Okay. So there's a potential on average, if we do follow the seasonal pattern, for price to head up to this area here and break into new all-time highs. Now we have to be a little bit smart. You know, the market is going to potentially find some resistance at previous structure highs. You know, the old saying is structure leaves clues. So I don't necessarily want to be, you know, aggressively adding into any long positions at this point, but these could be good areas for targets for us. So one or two options for me now is to wait for price to pull back, look for an opportunity to get long. Now, where could it pull back to? Well, you know, we've got these kind of previous structure highs that were broken. You can also see that it was used as support recently as well. So this area here, if we see price kind of stalling around there, that could be a good point to look for. I like to try and maximize that sort of, you know, return to risk ratio. So if we can get a little bit lower, perhaps back down into this kind of area here, we can see there's a lot of consolidation in and around that area there. Markets also retested key support in here as well. We can see very aggressive sort of longs coming in here around this level as well. So potentially in and around this kind of 7380, 7400 area, that to me would be a good area to start looking for those sort of long opportunities as well. So all I need really is for a pull back into this level here, little break in that trend, continuation to the upside. So that's what I'm going to be looking for today on the S&P 500. If we can get a little bit of a pullback into this zone here, I want to be looking for opportunities to get long. I want to look for potential buying opportunities around this level. So keep your eye on that one. S&P 500 looks good to me for an opportunity. Looks like we could potentially follow that seasonal pattern as well. If you want to add a few more kind of technical nuances to it, I'm not the huge fan of sort of trend lines, but sometimes when they're clear and obvious, they can be useful. But you know, you can see we have the sort of anchor formation point here, the first touch, second touch, and price has broken through that. Kind of supports the idea that on a price action basis anyway, that the market could move to the upside, but I'm not too concerned about that. What I'm looking for is, can we start to see those breaks in trends on lower time frames for a nice swing trading opportunity for a buy up into those previous structure highs in there. So let's move on to the next feature of the markets in 3. What are we going to be looking at next is the big story. And the big story for me right now is dollar yen. I still like the idea of watching this market. You know, we are breaking into some relatively new highs, especially for recent times anyway, into that sort of 162, 162.40 now. So, I mean, the last time we were around this kind of level we had a super sharp injection of liquidity from the central bank, and we saw prices fall all the way down into the sort of 140 area. And we are back up at that kind of 162 handle now. We've had interventions in the past, again, just kind of around these levels in here. And the market this time has almost like shrugged it all off because of the change in situation from the Federal Reserve. And they were looking for, well, they basically took cuts off the table. We started to see that very sharp recovery on dollar yen, and the market move back up above that 162. So I'm really interested in seeing how far price can go without any kind of significant intervention from the Bank of Japan, which begs the question, is this a tradable asset right now? Are you going to be looking to go long on this particular move? I don't think it's a very sensible thing to do. There's a lot of talk of intervention, and we do have a Bank of Japan that are looking to hike interest rates a little bit further. So is this going to be a smart trading decision to try and buy this market? I don't think it is personally. I'll be looking for any kind of intervention patterns that occur around this time. I'll be looking for any kind of sharp movements to the upside to potentially short on. So I just think that from a perspective of intervention, we could see something sharp. I mean, the last time we saw any kind of move, it was around about 500 pips. I actually think an intervention now would need to be sort of at a larger scale, and we could probably see some decent moves down into sort of the 150, 250s. Could we get another move down into the 140? Absolutely. But it's waiting to see how that formulates in terms of what happens with price. But looking at this right now, obviously the market is still bullish, so you can't go against the trend. It's not recommended to go against the trend. We have these breakouts that are forming, these triangle patterns. The market's breaking out and moving to the upside. So yeah, I don't want to go against this at the moment. I think that maybe, if we start to see closes back below 162, I'm going to be happy to look for potential short ideas on dollar yen. But until then, I'm going to stay out of this market. Another market that I did quite like the look of was Aussie yen and Kiwi yen. So if I just take a quick look at Aussie yen, just to see where we're trading at the moment. Let me just pop this on the screen. Aussie yen's a little bit of a different story. Price has already started to kind of break down, make lower lows and lower highs. So, if we do see any kind of strong intervention coming in, then the Australian dollar versus the Japanese yen could be much more vulnerable to a kind of extended move of intervention. But in terms of looking at it from a structure perspective, we are making new lower lows and lower highs here. We've got that daily 50 moving average, which is above current price action at the moment as well. So I do like the idea of this maybe continuing to push to the downside as well. But yen pairs in particular, we need to keep an eye on. I think there's a potential for this market to really start turning around, especially if we do see any more intervention signals. So let's move over to the last part of the day, which is the skill of the day. This is where I like to talk about, upgrading your skills as a trader. And, the one thing that I want to talk about today is that central bank intervention. It is very, very important to understand the mechanics of this in particular. Okay, so what I'm going to do is just maximize this. So essentially, what is central bank intervention? Why is it important? Well, obviously it's important from a trading perspective because it gives us opportunity in the market, for one. For two, if we are in a particular trade that could be susceptible to an interest rate an intervention, then our risk is at play, right? So we need to be making sure that we are comfortable to be within that trade and that we understand the risk that's available in that trade. But a central bank intervention basically occurs when a central bank buys or sells its currency in the foreign exchange market in order to raise or lower its value. And there's a lot of central banks that have actually intervened in the past. It's not just the Bank of Japan. We've seen the Swiss National Bank, back in 2015 intervene into the currency markets as well. And it happens much more than you realize. So it's important to know. But looking at the mechanics of it, what is it? So the appreciation mechanic is when a central bank buys the local currency and then the central bank sells a foreign currency. So in particular, if we take a look at sort of the dollar yen situation, and what typically happens is the local currency, the Japanese yen, has depreciated too much. Okay, so it's having an impact on their economy. So what the Bank of Japan will do, they will buy Japanese yen and sell US dollars, which forces dollar yen prices to move lower. Okay, so what they are doing essentially is trying to prop up and manipulate their exchange rates by getting involved and buying at large quantities of their currency or selling foreign currency. The depreciation is just the opposite of that. It's when the central bank sells the local currency, buys foreign currency, okay, because they're trying to lower the value of their local currency. Okay, and you can see here, I've got a couple of notes just saying a nation's currency undergoes excessive upward or downward pressure driven largely by market speculators. And that's what's happening to the dollar yen price at the moment. Speculators are buying US dollars because the idea that the central bank is not going to cut any interest rates. And the best value they're going to get from that is against the Japanese yen, because interest rates in Japan are low, still considered low, even though they're hiking interest rates. They've been at 0% for a long time, 0.1%. They only just recently started to move up to that 1% figure. So what is the macroeconomic balance here? What are they trying to do? Okay, so this is what I was talking about, why a central bank gets involved, okay, or what can happen, or what they're trying to balance by getting involved with an intervention. So depreciation danger, what that basically means is that triggers imported inflation, forces interest rate hikes, and hurts assets, markets, and growth. Appreciation, so this is where they kind of want to prop up their currency, pushes up trading partner exchange rates, and drives up global export prices. So what are the means and forms of an intervention? Because it doesn't always have to come in with actual participation within the market. Sometimes it can just be speeches from key members within the central bank. This is also called verbal jawboning. So that basically means talking up or talking down a currency via threats of or valuation warnings. Okay, and we usually see this from the Bank of Japan before an intervention occurs, because they're trying to basically hint at the market that we are going to do it, so that traders kind of get out of their positions, or at least position themselves differently. And you'll see, it will be like the MOF or the Bank of Japan members will come out and they'll start talking about, how they're going to intervene within the markets. Operational, so that is the direct execution of buying or selling in the market using foreign reserves. So that is either buying their local currency or selling a foreign currency. Okay, that's when they get directly involved with that. Quite often we can get concerted ones as well, which is multi-nation coordination. So that's when multiple central banks will come in and coordinate together to prevent overvaluation or devaluation of a currency. Okay. And then there's strategic, so of an FX action in domestic and open market operations. So the typical ones that we kind of see are these ones, indirect and direct, okay? So we just got some connections here in terms of the types of jawboning that can come in, and then just a couple of different outcomes as well. But essentially, that is what an FX central bank intervention is. And obviously it can cause sharp movements within the currency market. So if you are looking at trading your US dollar yen at the moment, I'd be very, very, concerned about getting involved too aggressively at this point. We have seen central bank members talking about opportunities to get involved. So that to me is a big risk. I want to see some kind of aggressive selling coming in here, and that might be coming up this week, especially because we do have NFP, right? So if NFP comes in and we start to see a very aggressive move in the US dollar, then we could start to see some interventions coming through into the markets. I mean, if we look at the monthly chart, the last time dollar yen was kind of in and around this region, we're looking at sort of 1986, right? Was the last time we were kind of around those 164 levels. So it's coming to a crucial point. And I think that's the most important point I want to make on this, is that dollar yen is coming up to a crucial point. Could be a huge opportunity, but also could be a huge risk event as well. So that's me. That's the markets in 3. I will catch you very, very soon. And I'll see you tomorrow.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.